Hello everyone, good evening. Welcome to tonight's webinar. My name is Ivy. I'll be your host tonight. Before we start off, I would like to do a little sound check. Please let me know if you could hear me. One moment, okay. Okay, if you can hear me, click yes. Okay, good response. Thank you everyone. Okay, so here's a little disclaimer before we start. So for whatever we are sharing tonight is just for general information and educational purposes. It does not constitute to any recommendation to buy or sell any investment products. And a little background about our company. Our company is called Phillip Capital Sendirian Berhad. We are incorporated in the year 1995. So our company has been around for close to 30 years now. And we are a wholly owned subsidiary of Phillip Capital Holdings Sendirian Berhad. And some of you may know that we are formerly known as Phillip Futures, but as we grew and expanded our service and offerings, we have renamed ourselves as Phillip Capital. Apart from that, we are also trading participants of Bursa Malaysia derivatives, participating organization of Bursa Malaysia Securities Berhad, and also a holder of Capital Market Service License. So Phillip Capital have offices across Malaysia. Our mother company is actually from Singapore, but our HQ is based in KL, Kuala Lumpur. And as you can see from the slides, we have a total of 11 branches across both East and West Malaysia. So if you're from any of the cities, you are welcome to drop by our branches and inquire about our investment related services. So for this slide shows the Bursa Excellence Award that we have received for the past year. And last year, thanks to all our clients as well, we were also very honored to be awarded as the first runner-up for Best Retail Derivatives Trading Participant, as well as the second runner-up for Best Overall Derivatives Trading Participants. So Phillip Capital has a wide global network. We have offices in 15 different countries, as located here in the map. As such, we do serve an international client base. And yeah, for our futures trading, we also provide listed in global exchange from US, like the popular exchange CME, CBOT, COMEX, NYMEX. We also have exchanges from Europe, Japan, Hong Kong, Singapore, and also Malaysia. So with our global coverage, client can trade both and futures, both local and foreign product within the same platform. Okay. So now onto our products. So we actually offer three main categories. The first one is futures, which includes diverse market like index future, agricultural metal, energy, and interest rate futures. Right. The next one is equities or stocks, and you can trade Malaysian shares, US shares, Hong Kong shares, Singapore, and Australian shares with us. So for the last one is contract for difference, or also known as CFD. We offer local shares and also US shares. CFD if you want to trade US indices itself, like Dow Jones, S&P 500, and also NASDAQ. We also offer CFD at a very attractive rate. So why are we your broker of your choice? First, Phillip Capital is an award-winning broker. We are very well established and also recognized in the market. Secondly, we offer 24 hours broking and executional support. If you have any issues regarding your trades and account, you can call in our dealing desk and we have dealers ready to assist you. The third one, we also provide advisory service on what products you would like to trade or how can you get started. And we also send out latest market news to our clients on a daily basis. So you can be sure to get the latest updates. And as mentioned earlier, our client can trade a wide array of products through our platform. And lastly, we also have online account opening, which is very convenient for you to start. So apart from that, we also provide free one-to-one coaching sessions. So if you like a more personalized coaching on futures trading, for example, or how to use the platform, we can always arrange appointments to guide you for free and frequently conduct seminars and webinars, and you can also start trading by opening the account for free, just as I mentioned earlier. So for the next one, so for the coaching session, right, it's actually more tailored for beginners who want some guidance on this topic, like how to start trading, about the product knowledge, platform, and charting system. So yeah, if you're interested, we are more than happy to assist you. So at Phillip Capital, we are constantly providing educational resources for our investors. You can check out our upcoming seminars and webinars by scanning this QR code, or you can visit us at our website at phillip.com.my to check out our schedules. We invited speakers from the industry to give market update and insight. So it's a good learning opportunity. So do join us for our future events. We also conduct weekly market calls, so you can join our research team on market views and updates on newly published report every Monday at 11:15 a.m. Or if you want to learn more about technical analysis, like how to spot entries or exits, you can. Then the second one is for you. Our analysis will do the technical analysis on the live counter every Monday at 8 p.m. Okay, we have online account opening, so you can open your accounts for futures, stocks, and CFD with ease and convenience, because you don't have to drop by our branch, and you can just do it online in the comfort of your own home. So if you want to open an account with us, you can maybe take a screenshot or scan the QR code right now, and it will directly lead you to the online application. So now on to trading platform. The platform that we use for futures trading is called Phillip Nova. It's actually very simple to use. We also have mobile apps for iOS and Android devices for those who like to trade on the go. Our platform is equipped with a wide range of technical indicators, live chart, market depth function, and you can get access to both local and foreign products. So if you're not our client yet and want to try out our platform to see the interface, we also have a demo account for you to try out. And for this is for our stock trading. The platform that we use is called Poems Global. Our platform offers all-in-one stock watch list, charting indicators, exchange, top 30 movers, powerful stock analytics, and market depth. So this platform is very suitable for new or experienced investors. Okay, move on to the next is our platform that we use for CFD, which is called Phillip CFD Trader. Our interface is also very user-friendly, and it has live chart, price alert, live market price, mirroring exchange, and advanced order type. All right, so we're currently running a few promotions. The first one is called Trade and Earn with Phillip. So you can stand a chance to win exciting prizes like an iPad, AirPods, Apple Watch, and also up to 1,800 of touch and go reload pin when you start trading any product with us, and that includes either futures, stocks, or CFD. Of course, the more you trade, the chances of winning the rewards are higher. So this promo will run until the end of the year. So actually now is a very good time to start. So the second is Foreign Stock Fiesta. So for this, you can actually earn up to 70 ringgit of touch and go reward if you open an account and trade either US stocks, Singapore stocks, or Hong Kong stocks with us. So for more information, you can maybe take a screenshot or scan the QR code to learn more as well. Or you can also contact our dealer and they will send you all the information. So our final promotion is the US Index CFD. And right now you can trade US indices CFD with us at only $2 US per contract. And you can also scan the QR code to get more info as well. Okay, before we dive into our topic tonight, let me introduce to you our speaker, Mr. David Law. He's the Managing Director of Top Infinity Sendirian Berhad, and a proprietary trading firm that specializes in trading global commodities, currencies, equity indices, financial derivatives market. And David has over 25 years of experience in the listed derivatives industry, and he was also a past president of Malaysian Futures Brokers Association from 2018 to 2019. So we are very honored to have him on board with us tonight. Do seize this opportunity to ask him any questions if you have regarding precious metal markets by dropping your questions in the comments box later, and we will address them at the Q&A session. So let's welcome Mr. David. David, I will now pass the screen to you.
Thank you, Ivy, for that wonderful, wonderful introduction. And hold on and let me share my screen.
David, we can't hear you. David, so sorry to cut you off, but right now we can't really hear you. Hi everyone, just give us a few seconds to work on the mic issue. So sorry for this technical issue.
Hi, David.
Please give us a few moments, yeah.
Hello, Mr. David, can you hear us?
Hi, dear attendees. David Low is rejoining the webinar. There are some technical issues at the moment. Can you guys hear my microphone? If you can you type yes in the chat or the question section? Okay, so yeah, okay, so he should be rejoining in just a moment. Please.
Are we back?
Okay. Yeah, I can hear you now. I'll make you.
Okay.
Yep. Okay, yeah, there was some technical issues just now. All right, you should be good to present and share your webcam.
Okay. Let me show
All
my
right.
webcam.
Yeah. All right, yeah, we can see that. All right, sure.
Are you seeing my
Have a great
screen?
one. Yes, sir.
Okay, hold on a second. Let me show my screen. Sorry about that. I was thinking, who is this scam caller calling me? Yeah, I should put your name in my address book. Hold on a second. Let me show this. Okay, let's go back to where we started. Where were we missing, Brian and Ivy? Was it here?
All right, from the start.
From the start. Okay, cool. No problem. Okay, so yes, we're going to explore this topic. Good evening again, everyone. If I missed you, right? It's good to be back. And yes, this is the topic we're going to share tonight, which is precious metals. Well, is it ready to strike gold? Okay, so is precious metals forming a bottom or ready to go on an uptrend? Okay, we saw some what call that, some upticks the last couple of months, right? So everybody was hopeful, but now he has actually come down and consolidate at the 1930 levels, okay, around the 1900 levels. So tonight, let's explore where silver and gold prices are going to go, right? Okay, let's look at this. This is the disclaimer that I have shown you, so I won't delve on that. This one is just a slide of myself, which Ivy has covered. So let's move on. Okay, so this is what we're going to share tonight. The first session, part of the session, we'll look at what are the key drivers, what are the factors driving prices currently for gold and silver. Okay, so we look at the most important things to look at in terms of looking at the price of gold and silver. What are the factors you must keep a tab on? Okay, so we look at that and then go in and look at what are the possible price directions over the coming weeks. and using chart readings, Elliott wave chart readings, we want to see in terms of gold and silver, which phase of the market is it currently in? Okay, is it in a sideways market, or is it in the beginning of a bull trend? Okay, let's have a look and discover those trends. And thirdly, of course, how you can position yourself for the trading opportunities in terms of gold and silver with the CME Group Precious Metals contracts. All right, so let's move on. Okay, first, a quick look at the gold and silver performance. Currently, year to date, basically, if you go look at gold and silver as compared to the whole list of these futures contracts right over here, you can see a highlighted gold is only up about 7.72%, and silver is down actually 6.81%. And if you compare to the equity indices like NASDAQ, as you can see my cursor here, NASDAQ is up year to date about 36%. You can see even S&P is up about 13.5%. So equities are actually currently doing better than gold and silver. And interestingly as well, if you look at things like crude oil, heating oil, those energy related kind of products is actually recovered, right? So it's picking up speed in terms of these contracts, the energy contracts as well, right? So gold and silver has basically been lackluster, right? It's just been staying very flat, okay? So what is the reason? What are the drivers? And where is it going is something that we will see in the next couple of slides. All right, so let's move on. Okay, so in terms of talking about commodities in general, okay, so we asked the question of is it time for commodities to come back? Okay, so this is a chart of the Goldman Sachs commodity index, which is GSCI, and basically it measures the prices of a basket of commodities, including energy, soft commodities, agricultural commodities, and including precious metals as well, right? So since in 2002, right, in 2002, basically it formed a high. Commodities, this index formed a high, and then after that took a tumble, right? Quite a steep tumble right down to the 520 level. At the high, it was trading at about 845 in terms of the index, and it's come down to 520 in terms of the low that it's formed. Okay, so the question now is commodities, has it found the bottom? Okay, has it found the bottom? Because before the 2022 high, everybody was talking about a commodity super cycle, right? So the previous commodity super cycle was in 2008, and it actually notched up a high in the GSCI index at 888.5. Okay, even the commodities know how to choose a very, very auspicious number, 888.5. And during the ascent of this last year's ascent, it actually went very close to this super cycle high in 2008. So it notched up a high of 845. Okay, so the question now is whether these commodities will form a base now and move up to retest this high. Okay, so this is something that we want to look at. Okay, and this is an interesting index that you want to follow as well. Okay, the S&P GSCI commodity index is actually a tradable index on CME. Right, so you can log on and have a look at the price. It gives you a feel of the commodity prices in general as a basket and where it is heading. All right, so let's move on. Okay, so these are the few things that you really want to watch out if you're trading gold and silver, right? These are the fundamental drivers. Number one is inflation. Okay, and we sit here, I think in the next hour, all right, in the next half hour actually, you will have the US CPI numbers coming up for August, and this is a very important inflation number. Okay, what happens is the Federal Reserve will watch closely this number to see where inflation is, right, and whether there is a risk of inflation getting very high, or is it well controlled, right? And with that kind of direction from the CPI numbers, it will form their strategy, or it will form their in terms of the interest rate. Okay, what they want to do with US interest rates, what actions in the future. It will form the basics for their actions in the future, right? So it's also something we want to look at, because on the 19th and 20th of September, the Federal Reserve, of course, will sit and also from that on decide what to do with the interest rates. Now, the interest rates, of course, in September, a lot of the traders and a lot of the experts are saying that it will stay the same. In September, there'll be no hike, okay? But the inflation number coming out today will point to direction of where the Fed is possibly going to go. Right. So when it comes to inflation, interest rates, the US dollar is another thing you want to watch. Okay, the trend of the US dollar, if it's a very strong US dollar, or the trend of the US dollar is going up, then it will put pressure on gold prices. Okay, because the US dollar and the gold price move inversely in terms of the direction. Right, that's something that you have to watch out as well. And in terms of the global economy, okay, is there a possibility of recession? Okay, because recession or times when things are looking bad in terms of the global economy or even the US economy, gold will tend to be favored in terms of the prices. So gold prices tend to go up during recessionary times. Okay, later we'll see some evidence of that. And lastly, the very, very important thing is to watch out is the conflict in Ukraine with Russia. This is something to see whether there's escalation of this conflict, okay? And are there any other conflict coming in other areas of the world? Okay, for example, in Taiwan, will there be a conflict? Will there be a war? Okay, God forbid that word, but will there be a war? So these are the very, very key fundamentals that you must continue to keep tab on when you're looking at gold and silver prices. All right. So and now let's have a look now at the US dollar against the gold. Okay, what you can see over here is the trend of the prices of the blue line is the US dollar index. Okay, and the gold price is represented by the area chart here and highlighted in the chart in orange. Okay, and as you can see in terms of the direction, okay, over the last 2-3 months, US the DXY, this US dollar index, have been inching up. Okay, it's gone up about 200 US dollars in terms of the DXY, and you could see that as the US dollar prices go out, gold prices will tend to fall. Okay, so they both what they call that, move inversely. So this is something that you have to watch. Okay, in terms of the US dollar strength, as it continues to strengthen. Okay, then you will put gold prices under pressure. And later we'll go in and see a chart of the DXY as well, and see what phase of the market or what phase of the trend currently the DXY is as well. And that will give you some idea of how gold prices will move, especially the relationship which is inverse. Right, so let's move on. Okay, so this annual US inflation rate. So we have a new number coming up in the next hour. Okay, the last number was 3.2%, and so far the consensus is there's a possible what the people believe that the prices will come in, inflation numbers will come in about 3.6%. Okay, another uptick. Okay, is 3.6%. We'll see the numbers coming up for real, the actual numbers, to see whether it is above or actually below the consensus. Okay, so the market is expecting a 3.6% figure in August. If it comes up with some surprises, then we may see, okay, the Federal Reserve have to do something, right? If the numbers come out higher than expected, then it may put pressure on the Federal Reserve to continue to raise interest rates after the September meeting. All right, so this is very important number to look at. So this is something that you want to monitor on a month-to-month basis. Okay, it's actually gone down to the 27-month low already in terms of the CPI, right? So highest was in mid of last year at 9.1%, and then come down all the way to a low in June, or so 1 year after that. Okay, so this is something that you really need to look at, and later this evening you will see the number coming up. Okay, next is the US unemployment rate, and these are the numbers as well that will influence the Fed's decision in terms of interest rate hikes. Okay, the latest number that came in August was 3.8%. Okay, from 3.5% in July, and this is actually the highest since February 2022, and it's actually above market expectations. Market was expecting a flat 3.5% compared to July, but it actually came in higher. Okay, so in terms of looking looking at this unemployment, that means when we say unemployment is higher, that means there's an easing labor market condition, and this is the one that adds to the expectation that in terms of the September actions for the Fed, they will not raise interest rates. Okay, so after September is something that the Fed will have to decide, looking at the numbers going forward. Okay, as it is, the easing number may see the Fed confirming that they won't raise rates in September. Right. The next thing is to look at, of course, we spoke about is the US interest rates. Okay, in terms of the relationship of the US interest rates against gold, is rising interest rates are negative for gold. Okay, and you can see here in this chart there is a comparison between gold, which is in the blue, and then you have the light blue, that's the 10-year notes. And then you have the micro 10-year yield futures interest rates, the interest rates, right? So as you can see over here, the trend of the micro 10 yield futures is upwards. Okay, when that happens, okay, which is interest rates, we will see also prices coming down on the what do you call that, on gold prices as well, right? So this is inversely related. So if you go in and also chart your micro 10-year yield futures, this is another contract that's tradable in CME. You can see the trend. If a trend of the micro 10-year yields are going up, then gold will be under pressure as well. Okay, so these are some of the relationships that you must keep tab on, right? Some of the prices of the micro 10-year yield, and also just now we saw the DXY. Okay, so as of yesterday, this is the Fed Watch tool. Okay, currently in terms of September, the traders are saying that there's 93% chance of the rates are not being hiked. Okay, this one of course changes day to day, but I think as it gets closer to the meeting on the 20th of September, this what do you call that? This percentage will be more or less stable at that price, at that percentage, right? So at current rate of 525 to 550, this is the current target rate, and players implied in terms of what they're doing in the markets, that 93% chance that there's no hike in September. Okay, so basically confirming most of the markets or the streets believe that there won't be any rate hike. Okay, but the next month, okay, there's also a figure here, right here, but perhaps it's too early to tell because the next meeting is not so soon, right? So in the next meeting, there's a 7% chance that it will raise rates, but currently I think it's very tough to read this as any indication at all. Okay, so the strongest indication as in terms of the CME Fed Watch tool, basically saying that you know, it's almost certainly sure that there's no rate hikes in September. Okay, now this is a tool that you can go, if you Google, go to your Google and type in CME Fed Watch, you have a link to this particular chart. It changes as you know, the contract, the ZQ contract changes. This is the implied what do you call that, possibilities or probabilities for a rate hike change. Okay, so now let's just look at some of the global economy and look at whether the possibility of recession is there or not, right? So if you talk about 6 months or 9 months ago, there's always been this fear of a recession coming in, and this is a report by the IMF. Okay, this is their July 2023 World Economic Outlook update, and basically based on what they are saying for that particular report is they are seeing 3% GDP growth for global GDP this year. Okay, only a 3% growth as compared to 3.5%. They basically see quite a steep drop in terms of the advanced economies. If you see the chart over here, in 2022, advanced economies was 2.7% growth, and it's almost cut by half in terms of the 2023 projections. Okay, and it will continue to be under pressure in 2024. Where are the good news? Okay, basically in terms of carrying the weight of global growth will be the emerging market and developing economies, right? So a lot of the emphasis or the weight of the global growth over the next 3 years or next 2 years will be China, and also will be India, right? They together will probably form something like 50% of the weight in terms of carrying the global growth numbers, right? So this is something that we need to look out. So it's going to look rather flattish in terms of global economy projections by IMF, right? They're seeing a 3% in 2023 and also 3% in 2024. Okay, that's the current reading in terms of what the IMF see. Right. Next, what are the key themes? Okay, so in terms of that report that came out, which you can go online and read the full report, these are the key concerns. Okay, these key themes that will play out over the next 3 to 6 months. Okay, number one is there going to be persistent inflation? And currently, the El Nino, okay, which is the phenomena of weather, okay, and in our part of the world, it will bring very dry, hot conditions, right? Extreme temperatures, temperature increases, right, which may affect commodities, right, in terms of the commodity yields and production. It will affect commodities, right? This is something which also will affect in the longer term our oil palms in this part of the world, in Malaysia and Indonesia, right? So if it affects the oil palm tree, then production will be lower, right? So thereby pushing up the upward pressure in terms of commodity prices, right? So when commodity prices, what do you call that, move upwards, if crude oil prices continue to rise, and the rest of this, the climate effect on commodities are going to cause less production in terms of the commodities, then you will see a overall rise in terms of commodity prices and oil prices, thereby pushing inflation again. So inflation will continue to be very, very high. Okay, and the resultant thing is the Federal Reserve again have to chase interest rates to see how to control the inflation. Okay, so this is something that really is a key theme in terms of what the IMF see. Okay, the second thing is the China's recovery, right? So the much talk about recovery in the first quarter when China opens up. Okay, a lot of expectations that China will be, will really give that push in terms of the global economy. But currently, in terms of the numbers that have been coming up over the last 2 months, in terms of the producer price index and their the numbers, basically nothing really exciting. Okay, it can be said that there seems to be a contraction, okay, especially in the real estate sector in China, and also the domestic consumption is actually weaker than expected. This perhaps due to the subdued confidence, right? This is a worry as well in terms of the IMF in seeing one of the bigger factors, the much expected China recovery factor is currently underperforming. Okay, so we'll have to see. Okay, some experts feel that it may kick in the last quarter of this year, right? That's the expected thing, because they see the real what call that effects could be towards the end of this year. So this is something you have to monitor as well. Okay, and then the last point is the geo-economic fragmentation. Okay, basically the world breaking into little packs. Okay, separate from each other, right? It's like, okay, I work with you, I trade with you, and the other guys will form a different group and then trade among each other. This is called geo-economic fragmentation. Okay, so this is something that is worrying. Okay, especially in terms of the stance in terms of the Ukraine war. Okay, and the rise in the geopolitical tensions. Okay, what we said just now about what is happening in Ukraine, and will there be something happening in the Taiwan Straits? Okay, so these are concerns even for IMF in terms of looking forward. Okay, so let's look at the gold price in relation to recessionary times. So if the global economy is not going to look good, or if it's going to turn bad, okay, turn into a recession, where will gold prices go to, right? So in terms of historical recessions, as you can see in this shaded gray areas, so these are periods where the global economy went into recessions. It has historically, gold prices has historically performed well during recessions. Okay, so during recessionary times, people somehow will move to gold. Okay, so this is something you need to keep in mind. So if the world economy is going to go into a recession, or it's going to be very stagnant in terms of growth, then gold prices tend to perform well during this time. Okay, so this is the last slide on the key drivers. This is something that will dominate gold prices. Remember the geopolitical flashpoints. Okay, these are the wildcards that if something happened here, then there will be big moves in gold prices. Okay. So this talk about geopolitical escalation, both in the Russian area and also in the Taiwan area, right? And in terms of looking historically, in terms of geopolitical risk effect on gold, instability in terms of geopolitical instability usually drives gold prices higher, right? So some of the examples over here, in the Iran Revolution, the Iran-Iraq War, okay, 9/11, the Iraq invasion, even the Ukraine conflict, right? This tends to drive gold because gold is seen as a safe haven. It's a hedge against what? Hedge against geopolitical risks. Okay, right. This is something that I think traditionally, in war times, everybody when war comes, they think of gold. All right. So in terms of a study done in terms of hedging geopolitical risks with precious metals, gold and silver, it has been shown that it actually perform consistently as a strong hedge against geopolitical risk, or GPR as we call it. All right, so this is something that you have to keep in mind in terms of in case anything happens or worsens in terms of the war in Ukraine or something is started in the Taiwan Straits. All right, so now we've seen some of those key drivers that you want to keep in mind, okay, over the next 6 months to 1 year. Let's go in and see what is the current phase of the market in terms of the technical readings. All right, let's move on. Now, this is a chart of gold futures in terms of a monthly chart, right? This long-term chart goes all the way to 2007, right? And basically, since 2007, there was this very bullish trend in terms of gold. Okay, and the Elliott wave basically is measuring this fifth wave. Okay, what does the 5 here means? Okay, the 5 is actually the fifth wave is actually the final wave in terms of the uptrend. Okay, so this bull trend, this monthly bull trend in terms of this reading has actually finished its action on wave 5. Okay, and what it is doing now is what we call a corrective wave. Okay, so in terms of Elliott wave, in the uptrend wave there is 5 waves, okay, which is as completed. Okay, there is 5 waves, and then after the 5 waves there'll be the ABC correction. Okay, now the question is this: after the completion of this somewhat flattish ABC correction, is it time to spur the bulls? Okay, so the key thing to look at is if this particular chart, the monthly chart, you can see right over here there are 3 tops here, and the crucial price to look at is 2089. Okay, so if prices of gold move above 2089 or trades above 2090, 2090, then you would possibly see that, okay, it's now forming a new impulse wave. Okay, as it is the trend over the last so many years since before 2007, okay, until its peak in the last couple of years. Okay, the trend has basically finished this particular bull. So will it form a new bull? Okay, so this is very crucial. If it forms a new bull, that means it has to take out this price point. Okay, this triple top, as a technical analyst would like to say it, this is the triple top. There's 3 tops here. It needs to take out this top. Okay, so if you see gold prices above 2090, then yes, basically it's going to give you a hint that it's going to start a new wave. All right, so this is something that is at stake out. This 2089 is a very stubborn resistance, 2090. So it's something that you want to put into your mind or write down in your diary, 2090. Okay, after that, then it's going to start on a new impulse wave upwards. Okay, in the weekly chart, okay, what do we have in the weekly chart? So we saw just now a consolidation as well, and this is also played out in the weekly chart. So it's currently going on ABC as well. Okay, it did rise. Okay, the last time it went up, okay, which was in what do you call that? This last try, okay, in what do you call that? In May, sorry, in first part of 2022, it has a high, right? And this year as well, sometime in May, right, it did this high but couldn't break through this double top. Okay, now it's coming down, so possibility of the C wave coming down is very possible. So that's what it's basically suggesting. Currently is a wave C sequence, so it may continue to consolidate and to gain strength. It needs to gain strength, and it needs to have very strong drivers to move it above this triple top. Okay, so this 2090 again is where the triple top is, and it's something that you want to really look at to see whether it breaks through. Okay, so currently if it comes down, okay, for those traders it's still a possibility of trading a downtrend. Wave C is a good trend to trade actually in terms of the movement. If it's going to move down to wave C, then possible zone is back to the bottom of the wave 4. Okay, so generally during the ABC correction it will retrace down to this level around the 1680 levels, right? This particular level right here. Okay, let's look at the closer, the 2-day chart. Okay, what is it doing? Okay, similarly as well, it's basically has shown that the fifth wave up for this particular up wave until May. Okay, so it's done this high, it's finished its up cycle. Okay, now it's doing the ABC correction. Okay, so with this ABC action, it looks like basically confirming that it will move down lower. Okay, so in terms of the 2-day chart, why do I not put a daily chart? I think the 2-day chart shows the action better, right, more clearly. That's why it's a 2-day chart. Right, so 5 wave completed, ABC right now, right? The correction can take it down to 1811 at this current moment. This is the target for the daily chart. Okay, the 2-day chart is the next support is at 1811. Okay, so currently still seeing some downside in terms of gold. So for those who are going to trade over the next 1 month or next 1 or 2 months, okay, the suggested trend using this chart, especially the C wave. If it's currently in the C wave is a very good wave to trade because it's very trendy. But the C wave, what it's basically implying is the C wave is a down wave. So in terms of in the next couple of weeks, you may see gold prices continue to trend downwards. Okay, so let's move on to silver. All right, this is a weekly chart, possibly mimicking gold as well. Currently is in wave 4 correction, right? It's gone up a bit actually since last quarter of last year. Silver actually came up to a very nice trend, right? Also peaked almost the same time as gold. But in terms of silver, there's still a possibility of another wave up because this is wave 4. Okay, after wave 4, there's another wave 5. Okay, so in terms of silver, you may still see a possibility of another wave up currently, which is it's going to retest wave 4. Where it's going to retest, it's possibly going to retest the 22,265 level. Okay, so if it establishes a bottom at this level, then it will be the base for it to retest this wave 3 high. Okay, this wave 3 high is 25.4. Okay, so this is something you want to look out for in terms of trading silver. Now, silver on the 2-day chart is basically saying correction, right? ABC correction you saw over the last few charts as well. So currently it's in a flattish ABC correction. Okay, and it's basically saying at this ABC correction, flattish run could actually end around the 22.265 level. Okay, so at the bottom of the A wave. So that's what it's saying. And the C wave, of course, is the final corrective wave. After that, then it has to determine, okay, whether it's going to take out the wave 5 high. If it does take out the wave 5 high at 26, just now we saw just now 26, then 26, then it will be able to fly higher. Okay, so currently it's in a sideways market. Okay, with a possibility of retesting the 22.26. Okay, so that's the look at the charts and the current scenario for the trend going forwards in the coming weeks. Okay, so how do we trade these trends? Okay, if you want to trade the wave C on silver, or you want to trade a wave C on gold, how do you do that? Okay, so let's go and look at some products. Okay, but before doing that, let's look at the dollar. We said just now dollar is a very important determinant of gold prices. if dollar is going to be strong, then gold prices will be under pressure. Okay, so in terms of the weekly chart, in terms of the dollar has actually come down to a very important consolidation area. This target zone at 99 to 102 is a very important point. It's come up here and it's bounced out. Okay, so the question now, has it formed this bottom? If wave 4 has formed the bottom and it's possibly hinted over here, we look at the this is what we call, the technical analysts call this the bullish divergence, where prices come down but momentum is actually going up. Okay, so basically it's saying that it's forming a turning point, and it looks like pretty obvious right here that it is actually has turned. Okay, so what this means is this. Okay, so in an upward trend, 1, 2, 3, 4, 5, there are 5 ways on the bull trend. So in terms of the dollar, there is room. Okay, there's room for the DXY to actually exit the wave 3 high. Okay, so this will it's going to be very bullish for the dollar. Okay, and once dollar gains strength, then it will apply pressure on the gold prices. Okay, so that's possibly the indication as well that gold prices may have to continue to come down for the time being due to the pressure from the dollar as well. Okay. Okay, in terms of this again is DXY on the shorter term and 2-day chart. Okay, so the bearish move actually have completed with a wave 5. Now it's on the up leg. Okay, so this as we say, just basically confirm the previous chart that this has ended. Okay, so the 2-day chart is confirming that it has formed a significant bottom with a 1, 2, 3, 4, 5 move. Okay, so now it's on the correction upwards. All right, so let's look at the dollar. Okay, so you've seen the dollar, you've seen the gold and silver prices in terms of their trends. Let's look at how to use CME gold and silver futures contracts to trade those trends. All right, so this is the famous gold contract, the GC, right? And basically this is the gold contract that everybody trades and refers to. This is the world's leading benchmark in terms of gold prices. So when everybody quotes gold prices, basically referencing this contract, which is a 100 troy ounce contract. Okay, gold futures GC is a 100 troy ounce contract. So gold, basically all the players who are in the gold market use this as a what do you call that, as a hedging tool, as well as a alternative investment in gold bullion. So if you want to invest gold, there are various ways to invest in gold. Okay, whether it's by gold bullion coins, mining stocks and all that. Some people actually carry a futures contract. Okay, because the futures contract actually gives you direct exposure to gold prices. Okay, so some people like this direct access, and you can also trade it in and out. Okay, so gold is one of my favorite contracts to trade, and on an intraday basis there's a lot of very good movement and a lot of volatility to be able to take advantage of it. Okay, so it trades almost 24 hours, and usually in the Asian time zone. Okay, our time when during the morning, about 40% of the volume is actually done in the Asian time zone, very interestingly. And a lot of the major turning points in terms of the gold prices are actually created during Asian hours. That's one interesting observation, right? And you can see over here in 20,000 this year, year to date, the average volume is 200, more than 250,000 contracts are traded every day on this GC contract. Okay, so very interesting contract. Okay, this is of course the contract is a large contract. Currently, in terms of the CME COMEX margin requirements, about 8,003, right? So those of you who say, wow, it's very expensive, 8,003, we have a solution for you. We have this micro gold contract, okay, which is a 10 troy ounce contract. Okay, so 10 troy ounce is 1/10 of what you saw just now, the GC, and this is a more affordable contract in terms of the capital requirement required to trade gold, right? So you can actually trade MGC, and that will give you a direct exposure to gold prices. Whether on the short side, if you believe prices coming down, you can also sell micro gold MGC to trade that position. Right? If you have a large position in micro gold, you can also offset your position with the larger contract GC, right? So it's a 10-to-1 offset because this contract is 1/10 the size of GC, right? Pretty active contract. Okay, average daily volume is about 63,000 right? Obviously not as large as the GC in terms of contract, but very, very active as well, right? And as you can see, the margins on the COMEX exchange for this is 830. So it's relatively a affordable contract to trade in terms of gold. Okay, so let's move on to silver. Silver is, of course, a larger contract. This is a 5,000 troy ounce contract. Okay, so this is a large contract. Margins about the same, 8,005, right? And of course, SI, the silver futures on COMEX, is also the world's benchmark in terms of reference to international prices of silver. Right, it's also been used in terms of safe haven in times of financial uncertainty. People will buy gold, people will buy silver. All right, so this is another way to assess the prices of silver. Right, again, 24-hour access, providing you with opportunities all around the clock. Right, we have also got a smaller contract, which is the 1,000 troy ounce contract called the SIL, which is micro silver. Okay, similarly to the MGC, it's a smaller contract, and of course the margins are smaller, right? 1,007 compared to 8,005 just now in the silver contract. Okay, so for those who want to trade a smaller contract, you can trade the SIL, the micro silver futures. Right. For those who are new to futures, later we'll see how to calculate the P&L. Okay, this is a quick look at the micro gold and its volume. You can see year on year, the volume is up 32%. So there's a lot of participation compared to the previous year. Okay, the year-to-date average daily volume stands at 68,720. So it's very very active. As you can see here, the quarter 1, quarter 2, and quarter 3 of 2013. You know, the volumes have actually surpassed those over the last 2 years. So there could be something really interesting happening in gold prices. That's why a lot of players are coming in. Right. In terms of silver as well, you have the micro silver and micro silver. You can see an uptrend in the contracts as well. So there's a increased interest since 2021 in terms of the micro silver contract. It's currently trading about 10,000 over contracts daily. So it's quite an active contract as well. Right. So an example of how to calculate the P&L. Okay, this is a bullish scenario. So if you feel that gold futures after its consolidation will form a base to go up, then you can actually go in and buy gold, right? So for example, over here, if you bought a December gold at say 1,900, okay, and then it rises to 1,950, okay. Now because gold futures GC is 100 troy ounce, so you've made here from 1,900 to 1,950 a $50 per ounce profit. So you need to multiply that by 100, so you will have a profit of 5,000. Okay, so it's actually quite simple. It's the prices are quoted per ounce, so what you gain in terms of the per ounce gain, okay, in this case is 50. You multiply it by the contract size, which is 100, so you get your P&Ls. Okay. Similarly, if of course if gold prices were to drop $50, then you lose 5,000 in value, right? The similar calculation. Let's go in and calculate the MGC, right? Show you just an example. This is a bearish scenario in terms of micro gold, okay? And remember, micro gold is 1/10 the size of GC, so it's only 10 ounces. So any P&L that you made per ounce in this what do you call the example, if prices drop to 1850, you shorted at 1900 and dropped to 1850, you made $50 per ounce. Okay, multiply by 10, okay, because it's a 10 ounce contract, then you get a $500 gain in terms of, because you are short, you are trading it on the downside, you gain $500, right? But of course, if you were wrong, then if gold prices were to move up because you were short, then you will lose money. And if you lost $50 per ounce, then you have to multiply by 10. You lost 500 US on a short position, right? So this is a very simple example to show you how the P&L is calculated. It's actually quite simple. So you just need to know every single dollar move in terms of the micro gold or GC. What is your P&L? Just have to multiply by the size of the contract. All right. So yes, we can go to some live chat setups. Okay. While we do that, please put in your questions. Let me go and go into a live chat. Okay. So all of you who have questions, I see questions coming in. Ivy, keep monitoring the questions. I will take questions now, okay, but let me go to a chart first. Let me see whether you can see this. Okay, so I'm displaying a 1 hour chart of the COMEX gold, right? So right now they are all waiting, okay, waiting for what? Waiting for the CPI numbers, okay? Inflation report coming out in 1 minute. Okay, so let's take some questions. Ivy, if you're ready and you have the questions, we will take some questions at this juncture.
Yeah, sure. There's some questions coming in. So I would like to first thank Mr. David for the insightful sharing. So if any of the audience have some questions, you can drop it at the question box and we will answer them. So first question I received is, would you see the potential of gold-based currency from the BRICS bloc?
Okay, a view of that. Okay, so it's something that's a new idea that's come out, all right? So it's still rather new, so it's kind of difficult for me to comment at this moment what is going to happen in terms of gold-backed currencies. We have to see. I don't have a definite answer for that. It's a great question, right? And everybody, including myself, is asking what's the impact and how will that pan out against, say, the US dollar, right? We have to see. Unfortunately, I don't have a definitive answer for you for that. Okay, so perhaps we'll move on to our next question.
So the next question is from Mr. Hong. He asks, what would be the impact if another pandemic occurs in the near future?
Okay, so you've seen the gold prices, what happened to gold prices during the pandemic, right? Let's move on, just go and see what happened, right? If you see right over here, okay, what happened in 2020, right? Let's go to the weekly chart. Okay, so weekly chart in 2020, you saw gold prices actually rising during the pandemic. Okay, so just now we also saw a chart. Okay, so if you have another pandemic, God forbid, okay, where do you read news that there's another pandemic coming? But then, okay, you can see during the pandemic, actually gold prices rise. Okay, because in terms of the global economic outlook, if another pandemic is going to hit the world, it's not going to look good, because number one, we are just coming out of it. Okay, so if another one is going to hit us on the head, okay, perhaps okay, this same pattern will appear again, right? In 2020, you saw prices actually form a bottom and actually move up again, right? So the possible scenario is if there's another pandemic that's going to happen, the same what you call that pattern will happen, and gold will rise again. Right? I hope that answer. That's of course speculative, right? We're just basically looking back in the history and saying that, okay, that's what happened in 2020 to 2021 and 2022. So you could repeat the same pattern again if another one comes. God forbid. Back to you, Ivy.
Okay, so the next question is, will US go into recession in Q1 and Q2 2024?
So if you have been following the news, the fears of recession has subsided a bit. Okay, so that's why a bit more confidence has come back in terms of the US economy. So we have to see. We don't know yet. Now, if inflation is going to continue to climb, right? So the thing is this: if inflation is going to continue to climb, and if the Fed is going to pursue a very aggressive interest rate hike again in terms of trying to control inflation, then the continuous hike in terms of the interest rates will really pressure, okay, businesses in terms of the cost of borrowing already, cost of doing business, and inflation continue to hike, then the fears of recession will come again. Okay, so we really have to see how inflation or how the Fed controls inflation in terms of their policy and interest rates, and if they have to, if the hands are forced by the numbers or something happen. Okay, one of the things, as you saw also in the wild cards, okay, in terms of China, Russia, okay, those are if those war were to escalate, and war is a very inflationary factor, right? The effect of war is very inflationary. So if inflationary were to run away, right, then you see the Fed have to be, hence are forced to raise interest rates, then that is probably going to tip, okay, the fears of recession is going to appear again, and that's the fear that you know, if what do you call that, interest rates continue to climb, it's going to tip the economy into a recession. Okay, so those are the things that really have to watch in terms of going over in next year. What's going to happen in terms of those wild cards? What's going to happen to inflation as we see it come out? It's already out, I think, and what the Fed is going to do. Okay, those actions are going to be the determinants of whether US is going to go into recession. I hope that answers your question. And those are the factors you must watch. Back to you, Ivy.
Okay, sure. So now, since we still have time, we'll address one more question. So the last question will be, any suggestion for beginners who wish to start trading in gold or metal?
Okay, great question. It's certainly one of those things that Malaysians actually love trading gold, right? So during the COVID and the lockdown period, the MCOs and all that, the favorite thing was going to buy gold. Okay, so I believe for beginners, okay, so those of you who have been investing in gold, right? Some of you have been buying gold accounts or buying physical gold as well, right? So one of the ways to actually get exposure in gold prices, okay, is through the futures contract, right? Even silver, right, as we saw today. So you could actually participate if you're bullish, right, in the long term. You could actually go in and buy a MGC contract, which is a 10 ounce contract, okay, or a 100-ounce contract. You can afford it, a 100-ounce contract, okay. You can see that the margin requirements to buy a contract in 100 ounces, okay, and 100 ounces is about 2.1 kilos of gold, okay. No play there. It's a large amount of gold, right? And if prices are, say for example, at 1,009, it's worth about 190,000 US dollars worth of gold, right? 1,009 times 2 more 0. All right. So with that, okay, but interestingly, how much do you pay for that? The 100 ounce of gold is actually, you need to only pay 8,007. Okay, so that is your initial margin that you need to pay for owning that gold. Okay, so what the gold contract gives you is the ability to leverage. Okay, so basically you are using your money very efficiently, right? So let's not say the 100 ounce, even the 10 ounce gold, right? It's quite a lot of gold in that sense. It's about 200 grams of gold, right? And basically, in terms of your outlay, in terms of holding that exposure, it's only 870 US dollars, right? So one of the ways to get the exposure to gold prices, an excellent way to do that is by trading or holding a contract in the COMEX gold or the MGC, the micro contract as well. Okay, so I hope that answers for those of you who are beginning to look at gold as well, and you like gold, okay, or you like the transaction. But if you want to trade as well, right, you can trade the MGC for beginners. Of course, start small, right? Start small. Don't go so aggressive and trade the large one first. Trade the MGC, okay, get a feel of how the gold prices are, and then when you're ready and you're more skilled and more knowledgeable, then you can upsize to even the GC. So Ivy, I hope that answers the question.
Okay, thank you, David, again for the informative sharing. And so that will be the end of our Q&A session. So David, I'll take back the presenter slide.
All right, back to you.
Okay, so once again, thank you, David, for that sharing. It was very informative. So if you're interested in opening an account with us, you may take a screenshot and scan the QR code here. And for you guys who are keen to connect with us, you can find these platforms. Just search for Phillip Capital Sendirian Berhad on our Facebook, YouTube, Telegram, and Instagram. We post quite a lot of updates there regarding our events, promotion, market news, and updates. So be sure to follow us so you don't miss out on any of our updates. Now, we also do upload our recorded videos on our YouTube channel as well, so make sure you check them out. And lastly, this is our branch's contact for you to reach out depending on where your location is. So you can visit our branch or contact the branch nearest to you. You can also take a screenshot of this if you want to. And if you have any inquiries, just feel free to call us or drop us a message anytime. Okay, so with that, I think we have come to an end for our webinar. So we appreciate everyone for your time, and thank you so much again to David for sharing once again. So we hope to see you in our future events. Thank you, everyone. Good night.